Here they are. Hey, Steve, Andy, what's going on?
Thanks, Scott. Hello, Andy. Hello, Tuesday crowd.
Hey, Steve. Hi, Scott. And hello, Tuesday crowd. Good to
Yeah.
have you.
So I think you might have been worried about your audio, but I hear you just fine.
Okay, good.
All right, so let's get us started on yet another trade of the week. These 7 days just sneak up really fast. The old reminder that we are a software as a subscription company. We're not registered investment advisors, so certainly anything you see or hear should not be construed as financial advice, especially tailored to yourself. We're going to talk about a few things as usual, market related, maybe a few stocks and ideas, but again, it's not to be considered advice. It's just an opinion, and that should make the lawyers happy. So we've been around for about 14, 15 years almost now, and myself and Andy are one of the first traders to ever use it in beta, in the original version. So we've seen a lot of changes, and we've seen a lot of layers added to the program. And what I'm getting at is it's not something you can learn in just a couple days and a few video tutorials. There's a lot of layers to this program, and it takes a few days, maybe actually it takes a few weeks really to get a full grasp on it. So what I'm saying is, we do a lot of 5-day test drives. And the people who are serious about it, they go for another month because they realize, the 5-day was just an appetizer to really pique their curiosity, but you can't really turn over every stone in just a short 5-day period. So we make a lot of opportunities available to the users. We try primarily the live trading room with Barry Anderson. He's got hundreds of people in there every day, and it's free. It's a great price. And it's a great learning environment, as well as some technical support if you need it. Barry is very generous with his time and his desktop, and he can demonstrate how to do things in a visual format, and he's there when the markets are on. So, if you haven't logged in there and you were not aware of it, it's a good time to maybe, pop on in there. It's at the top of our website under live free trading room. The afternoon webinars, I helped Jamie yesterday, myself today, and Wednesday and Thursday we have afternoon webinars. But on Friday we don't. A lot of people are out the door on Friday, so we have another live support session, another 3-hour, 2 to 3 hour window, depending on how busy it is, that we are making ourselves available for screen sharing. Same format we have right now, the GoToWebinar format. So people come in and ask questions that they've been maybe having trouble with, a scan, or don't understand something. It's a great way to just kind of pull up a chair as we make ourselves available on Fridays and take advantage of that time. And typically there might be 3 or 4 of us in there to help people. And then lastly, the TA University, that is during the market each day from 12 noon Eastern to 1. And it's a great way to, again, have one-on-one or small, a small group access, I should say, to us. So we go through the material, start off on the easy stuff on Monday and finish with the more advanced stuff, back testing and things like that on Wednesdays and Thursdays. But more importantly, it's yet another time frame in which we're available to you guys, new users, that is, and anybody who else wants to show up to come and get some immediate help. So all those things combined really help move the learning curve, is what the word I was searching for there, make it a shorter learning curve than it needs to be. So another week, and our content again is man and machine combined. Just a constant reminder that our future holds great technology for us, but it's not something we turn our back on and just run on autopilot. That's science fiction. It doesn't work like that. We need to have a human interaction and decision-making process, and the discretionary final decision process really is with us humans, and our technology, whether it's the AI or the custom design features or the soon to be coming paper trading module. These are all devices to help you narrow down what's working, what's not working, and help you as a trader make better decisions, whether it's short-term, super short-term, or longer-term swing trading ideas. So we'll keep this slide up here until I no longer think it's applicable, and I don't know if that'll ever happen. All right, so this is the format for today. The format for today is essentially kind of the same formula we do every week. I've got some thoughts on the market recap. Andy has some thoughts on maybe a few things that happened in the AI today. The trade of the week actually did not trigger. We'll go over that and possibilities for it, and then kind of dovetail into the same fashion in terms of scan and methodology that the trade ideas trade of the week came into. And I've got a couple of things I back tested, and I found a couple of interesting items that I'm going to share with you guys and just kind of remind you when back testing. One of the better tools is to remind us, hey, what's not working? Don't try and shoehorn something that's not working and make it work. It's just not working. So put it back on the shelf until it does work. We'll get to all that. It's been a while since, or at least a couple of weeks since we looked at the sectors. There wasn't really a whole lot of sector that jumped out at me last week, maybe a couple. The alerts that we set last week, we'll go over those and talk about why they really didn't work. And then I've got some new alerts that we'll try and set this week as a parting prize for everybody showing up. So turn that back off, and let's minimize that and bring up my trade ideas. And there we go. Welcome to my desktop here. We'll start off with the SPY and spiders and bring this back a little bit. You know what I did yesterday with Jamie's group is just kind of remind everybody where we are in the bigger picture here. It's been quite a bull run for the most part, with a couple of volatile hiccups, very quick correction here, but for the most part in the bigger picture, this is what it looks like. And as we approach and zoom back in, we're kind of looking at two scenarios, two probabilities here. It's either going to be in hindsight, in the future, looking back till now and seeing how this resolves, it's either going to be the most obvious double top we've ever seen, or just another ho-hum, higher low, higher high, whatever you want to call it, that makes a trend what it is. In this case, the weekly chart kind of just shows us where we are. And of course, there's the inflection point of where we are now. So let's zoom into the daily time frame. And again, a little bit closer, we can see, if we just kind of maybe draw a little line there, that 2 days ago, Thursday, Friday last week, we had two attempts to move higher and through it and couldn't close above it. It's most important that we close above, like I was saying back here when we were fighting with the 50-day moving average. It's very important that we post a few closes above that moving average and don't look back. Well, we did that. Well, here we are now. We're at the final hurdle again. And it wasn't surprising that the price action just sliced through that like a hot knife through butter. It expended a lot of energy, trying to get, from that congestion level up to the next resistance level. So, we kind of mentioned last week and yesterday in Jamie's webinar, it wouldn't be really surprising to see some consolidation, as long as that consolidation is behaving with this 10-period moving average. Remember, the 10-period moving average on the daily or the intraday, to me, basically tells me if the momentum is intact or if the momentum is stalling and breaking. Lastly here, to get everything perfectly lined up, this 20 period will probably cross that 50 period here in the next couple of days, and we will be back to price action being supported by the moving averages, all fanned out very nicely. Very different to what we had back here, this nightmare of chutes and ladders and just blasting through levels and high volatility. So our candles are coming back to a smaller, more reasonable type candle, as opposed to the volatility that we had back here. And again, the vol are back to kind of a more reasonable volume level. But we fully expect price action to kind of circle in a holding pattern underneath these levels of resistance as the potential energy gathers steam and the troops gather some energy and a couple hot meals, and then they have hopefully the potential energy, the bulls, or hopefully that is, to move and push through higher. It's very rare to just see something like this just kind of move through a significant level and just kind of keep moving. No, we're going to have a fight. The sellers are going to put up a fight here, and they kind of put a shot across the bow, at least in the first two wicks back there, saying there's no way the price action is going to get above and close here without any pullback and further consolidation. So that's what's happening in the spiders. Back to saying it's very hard to make a bear case right now. The only thing the bears have to hold on to is this going to be a double top? And if they stick around and they're wrong, well, then that answer is going to be a painful and expensive one for them because they'll be having to wait until it's a big loss, proving them incorrect. Let's go look at the NASDAQ, because there's something kind of interesting going on over there. And it's today. There's our moving average, where again, same thing, we're out of that volatile level over here. We pushed higher, perfect back and fill here on that gap, came back and filled that gap. A lot of nice, neat, tidy work backing and filling. And speaking of nice, neat, tidy work, look at our favorite moving average. Hold the price action, you know, like a baby, like a bird in the hand, just holding it back. I've been saying a lot of times it's very hard to get movement more than a day and a half or 2 days in this market, and there's kind of a bookend piercing wicks for you, a bookend bottoming tail, and then quickly into a bookended topping tail. And what I'm kind of just really trying to tie together here is the pullback was a perfect pullback into the moving average. Yesterday it held, today it tested, more importantly it closed way above it, and today it held as well. So the NASDAQ is really showing just textbook strength over there, exactly what the bulls would want to see in terms of momentum staying intact. So this was the perfect point at which the market dug in, and maybe we'll be building on those. Now, I get to FedEx in a second. We had kind of a bad earnings miss after hours. FedEx is trading down here for those that didn't catch it, but it doesn't seem to be really affecting the majors too much. They're for the most part pretty much right there where they closed. Back over in the Dow also got close to its 10-period moving average. It's also very close to its all-time high there as well. And then lastly, the IWM has been rather curious of late. Big push out of that moving average that was holding it down forever, and kind of led the way for a few days. You know, last week we got a couple of days where the AI, I think it was last Tuesday, the AI did pretty decent because the small caps were firing left and right, and they were following through with the Russell 2000 here, the IWM. Basically, you know, passing the baton. I believe this is money managers at work here, finding where the value is. This is the respective all-time high, and we're not even anywhere near close to it, but you can start to see now when we pull away, you know, give or take a little bit back here. I'm going to let those green bars move through, because when I mark this up, we have a lot of touch points here. We have a touch point here and here, a little bit of mess there, but a touch point here, touch point here, here, here. This is a significant pivot level now. So, you know, let's just take a look at that. Those double wicks right there. If the IWM can push back through that orange line, I bet you we're going to see a lot more follow through on some of these small caps. And the way in which the price action is acting here, it's not giving a very deep pullback. There's a lot of people who are saying, hey, I really want this pullback down to this moving average Steve always talks about. Well, you know what? We're not getting it. And we actually have a couple of stocks we're going to look at before we close today that have this same kind of action. Big run up and then sideways action. That's my favorite. My favorite of all is the big run up and then sideways action, and then just monitor that and wait for the right moment. We'll talk a little bit more about that later. So that's it for the big picture of the markets. Back to, you know, bulls on alert back here when these moving averages were really pushing on the price, possibly going lower. Well, the bulls broke through and pretty much gave the direction or change the momentum of the game is what I'm trying to say. And I think we're just in a holding pattern here for the inevitable retest of these highs. And after that, we'll see what happens. You know, feels like, I shouldn't say feels like, these are continuation patterns that we're looking at here. So the odds favor a continuation. We'll see. Anything you want to add to that, Andy? That's all I really got there.
No, you covered it very well. I mean, the setup is there. Yeah, just see if we can get anything to push through with some up behind it. You know, that's been the disappointing thing, I think, when you go to these all-time highs. The volume's not there, and it doesn't mean it's price action. We're still there. You know, the talking heads will have big grins on their face and be talking about all-time highs, but I want to see something, you know, with some follow through for several weeks and not just a couple of days and then right back, you know, down into the range again. So hopefully we'll get it this time. Yeah.
Yep.
Yep.
All right.
All right. I think you're right. I think you really got a key on that IWM, because if it can't get through, because let's face it, it's a long ways away from its all-time high. Mm-hmm. So if it can't get through that level right there, I think once again it's going to drag on the.
Look at what if we put this on a weekly, it might be very ominous. Yeah.
Yeah.
The big old head and shoulders.
Well, yeah, that's a very significant pivot point there. Yeah.
Isn't it? Yep.
All right.
Most part. All right.
All right. I'll grab it. We'll talk a little bit about Holly. All right. And so far so good. Yeah, I'm not seeing they're jumping. milliseconds are jumping up a little bit, but I think we
I hear
got
ya.
enough. Yeah, we got enough
I see ya.
juice here so we can get through it here. All right, so I got Holly. I am showing all the strategies in the strategies windows. These are all the strategies. You will see some duplicates in there because sometimes the strategies make the cut in different segments. And I'm also have the all the trades that came out today through. And there was quite a few today. I was kind of surprised. We had, what is that, 23, 31 trades. So that was for the kind of day we started out having. Let's pull up the spiders real quick and look at the intraday action. And boy, it was just kind of sloppy all day. You can see here the open and just still feels like summer. And I kind of warned you guys, it just seems like it takes a while in September before we get started. Although there in the last 45 minutes, we did have a push, you know, 2 highs. So not all was lost. A marginal gain there of 0.26% in the SPYs. And so looking at Holly, let's take a look. I'm going to pull this up now so we can see all the trades. Hold on here. Come on, baby. It's not letting me grab. There we go. Like I said, quite a few trades today. All right. Well, guys, this is what I kind of usually focus on. It's kind of my favorite way to grade Holly. I mean, I definitely like to look at full risk and risk on, but when it comes down to like our publications and what we really value her on, it's on risk off, and that's why I'm always kind of focusing on risk off. Now, if you look here, it was almost about the even number of winners as we had losers today, and we had a lot of shorts in the winners. Even though only a few fired, there were some nice little winners today in risk off, which makes sense because the market was, like I said, kind of sloppy for most of the day, you know, take away the last 45-minute rally. But here's what's great, and this is why I always tell you, you know, it's winning percentage is not the biggest thing. As a matter of fact, it's far from the winningest thing. You know, your average loser versus your average winner is much more important than winning percentage. Of course, you don't want a strategy that spits out a 25% winning percentage, but in this case right here, you can just with the naked eye, you can look at this risk off column and you can see, although there was probably equal distribution in winners and losers, because of our stops, okay, all these were $100 losers. Let's take a look at the top 1, 2, 3, 4, 5, 6, 7 trades, all 100. Now let's look at the top 7 trades here. You got 1, 2, 3, 4, 5, 6, 7. You only had, the lowest one was 100, and look at all these values much greater than 100. Even one here, great trade, and I'll pull this down now, and so we can take a look at this. Beautiful trade here in true. On a call for breakout, and you can see there on the daily had a nice little pullback, got a little sloppy with the market for a few days, and then boom, there was the call, and on the next candle just a nice push there. Beautiful. So in risk off on this one, this was target hit, so we got basically, this was, yeah, $1 target, so target was hit on this one. And man, if you held on to it longer, you could have made a little extra money, but of course you would have had to sit through a little drawdown here. And the next winner is a short. Let's take a look at PDCE. And another great trade, no pain trade is what I call it. Okay, here's a stock that drove down, gapped up, and then after a series of green candles and a little bit of sideways action, we kind of broke that with vengeance. There is your trigger to short it at 35.63, and some nice gains there. Once again, another target hit. That's great seeing these target hits. That's what you want to. That's what you want to see when you're playing Holly's strategies for sure. But looking over here, you can see where the winner was because of that late day rally. If you would have remained in full risk, okay, you can see a lot of these values traded much higher. I showed you the TRU, and then not only that, even this short, if you held on to it, even though the market rallied at the close, still finished lower than the target price. So you would have made extra money on that in full risk. And basically what it's showing you here now, what you got to realize is once you got stopped out on like this Skyworks right here, okay, when you're in full risk, you basically ignore even your stops. So you can see this was a buy, got stopped out, traded sloppily for a while, then rallied. So you would have had to have stayed in that, and you would have made 326 based upon a $200 stop loss, according to my figures. But overall, Steve, I think with the action we had today, I know this is not an easy day.
Yeah.
I mean, we both know that because we're trading a little bit of this stuff, and I'm focusing more right now on my swings to my paper trading, but nonetheless, boy, you see performance like this when the market pretty much most of the day was just a sloppy mess until the last 45 minutes. That's a good day. That's a good day from Holly. So even if you would have been hooked up to her on auto trading, you still would have made some money. So that's about all I have, Steve.
I'll take it back.
I'll pass it back to you.
Yeah. It made me remember something that I forgot to mention. Curiously, as we're at this big inflection point that I just spoke about yesterday, tomorrow we have what I mistook last week is tomorrow, the big Fed day.
Yes.
Tomorrow could be a catalyst in the way of Fed or any comments that Powell makes after FOMC minutes or decisions and policy minutes are released. It's always an interesting day. Typically, SPY ETF after 2 p.m. Eastern finds a way to make yet a new high and a new low post 2 p.m., which is always interesting. So if you haven't sat through one of those, just be aware at 2 p.m. tomorrow, the volatility in the fund starts trying to parse what the Fed is doing. The market is dying for a significant rate cut again, even though we're at all-time highs. It's a crazy world we live in, but that's where we are. So thanks for passing that back. We'll move on now to the trade of the week, which this week I borrowed again from the A table. We'll talk more about that and we do some back testing a little bit here. But it's FND, and it was at first glance, that's what I found, and I tried to find something that I felt was better, some different scans, and the timing just didn't quite seem there. So one of the reasons I did like FND is we've talked a lot about these stocks we can move through them a lot that are on the A table. A lot of times they're waiting for here's a good example here. MTZ got ahead of itself, pulled back, made a fresh 3 or 4 day low right there, bounced into that daily moving average, and that was the buy signal. So back to FND, which is still on this, I believe was still on here, maybe not. I guess not. Going back just 2 days, let's zoom in a little bit. We can go back 2 days. There we go. So pulled back 2 days in a row, tested that moving average, bounced off of it. And as you can see with the blue line kind of capping the ceiling of this level here, kind of a rising wedge as they call it. And as long as they're coming back and bouncing and touching that moving average, that's kind of what I want to see. There wasn't a huge short float contingent in this one. It's just kind of a pattern on a strong stock. And the fact that it did also, again, it did show up on what we call this jam down alert. I'm going to talk about that in a minute. But I like to use these two alerts together simultaneously. Sometimes I will see them show up there. We have an example today. We're going to see it. Zoom Z is not only on here on this little bit of a jam down, but it's also a very strong stock on the A table. So these two alerts kind of work together for me a lot. And so back to FND, the trade of the week. It's still very much in play. Now, what we don't want to see happen is what unfortunately happened the prior week, and that means going up, printing a new high or two, and then doing that dastardly reversal. So if we were involved in last week, we have a little bit more hot stove touching under our belt and in our experience wheelhouse now. We don't want to see that. We want to see a push through and some follow through, ideally a close above that. Even though Twitter did that to us, a few weeks ago on this day right there. Big old push through. Let's just reverse this thing so we can see. I mean, look how horrible that was. Twitter looked kind of like FND does now. Gave us that wonderful move in the morning and then that damn reversal in the afternoon. But It doesn't always mean it's going to fail, because look what Twitter did the next day. Boom, boom, and then it went higher. There's our 2 or 3 day move before the short time frame traders take their profits. Price resets, pulls back, and ideally digs in and builds a higher base camp than before. And that's all Twitter's really doing here. So you can kind of see, if you're a trader and your time frame is, just a day or two, you really got to be prepared to take those profits when they're there, because they don't last long. It's, this market's 3 steps forward and 2 steps back, pretty much across the board. So you got to try and time the jump rope correctly. And again, I'm going to make a point on that when we get into exits on swing trading. So back to the trade of the week. Is not triggered. It very well could trigger tomorrow, especially if we get some bullish news. But if it does, 2 things. We want to see it push through, follow through, close above that blue trigger line, but do not want to see it come back and test. It's actually getting kind of close here. The 20 and the 10 period are getting kind of close. We do not want to see it close. We could see a wick through something like that, a little bounce, and then pop back up. That's okay, but we don't want to see, an ugly close below that 20 period moving average. That's going to be our moment to get out. And then last week, we talked about how it did fail us, and in real time, we switched to that 5-minute chart and watched those levels intraday. Typically, the first push low will happen early in the session, and then that's the low that we need to hold. That's the low that I expect to come through on this alert and see that low hold. If price rolls back over and starts printing a new fresh low, chances are that setup or that price action is not going to work out the way we're hoping it will, and we've got to get out. So last week, was a recorded webinar, and it was the recorded step-by-step of anatomy of a trade that didn't work. And I gave some illustrations. If you want to go back and watch that last week, I talked about how to look at the 5-minute chart, look at that morning low print, and make sure that morning low print holds. If it doesn't and starts to trade back lower, that's probably an indication that we may be looking to close at the end of the day. That's the only way we can have a future crystal ball and try and gauge what the close is going to look like if it can't hold that first morning low push, which a lot of these wicks on this daily chart, I guarantee you are. They're the first push in the low in the morning. The buyers come back in. All right, so FND did not trigger. It very well could trigger tomorrow, but we want to see it close above and hold that blue line. We don't want to see it close below the red line. So with that said, I kind of had some thoughts I wanted to move forward to. Yeah, we're going to go to the back testing. So what is working? Well, about a month and a half ago, before we had all this crazy volatility, and this is going to come into play when we back test here. Let's look at this. So what have we had? We've had about 18 or 20 days of, okay, we're going to move out of this volatility craziness. Before that, we had about 20 days of absolute craziness. Before that, we had a good solid week of selling back there. So a lot of different market backdrops when it comes to back testing. So what was working really well, I think the last time we tested this alert over here, the jam down, things were kind of back to where they are right now. All right. But let's use the back tester and see if this strategy is still holding up. For those that tuned in back then, maybe a month and a half ago, I would back test this for like a 2 or 3 day hold, kind of a swing trade hold. And again, it's looking for strong stocks. They might not all be on here, but the strong stocks are only going to show up on here, and they're only going to show me an event where it's in the morning, or scratch that, it could happen at any time during the day where there's a big price push down below recent low candles. And sometimes that's the perfect opportunity. It doesn't feel like it, but it's a perfect opportunity for an entry to go long. While they're selling, you're buying. You hear people say, don't run with the grid, don't run with the crowd. You've got to find a way to distinguish yourself and separate yourself. And in my world, this is one of those ways to try and separate yourself. I mean, in the world of professional sports, whether it's basketball or a wide receiver trying to get separation off of an incredible athlete DB covering him, there's very little window for error. And so if you're going to follow the crowd around and wait for breakouts all the time and buy when it feels strong, you're not getting much separation on your defender. But when you can find a nice head fake or a crossover dribble like this, I know Andy's laughing over there on that one, on a nice jam down here, that's like a little crossover dribble. You got the defender on their heels, and it's a nice little entry point on a good longer term trend there. And you get yourself more meat of the move by doing those more aggressive contrarian entries. Okay, so that being said, the idea here is to go back and say, hey, what was working? So I highlighted those last 20 days in the market for you to show you we're only going to say, okay, again, this is the tale of three tapes here, three different chunks of market. Let's just go back and back test the last 20 days because we're going to try and catch this nice upward movement we've had for the last 2-3 weeks and see if that continues, which I think it will. What can we expect? Well, so far, let's go ahead and back test this, like I said we would do. The starting times are correct. Exit. Here's what we're going to do. I'm going to say at market open the day after tomorrow. Okay, so that's a hold from today, tomorrow, and then the open on the following day. Risk management is going to be a 4% target. We'll take that any day of the week, and we'll risk 1% to get that. So a 1 to 4 risk ratio. And here's where we're going to say just 20 days. We're going to sample just the last 20 days because I mean I went back and I did it. And if you sample the full 60, it's a real washing machine twister of what's going on over there because there's three different dynamics: a big sell-off, horrible volatility in here, and a nice semblance of a nice trend starting to build again. So we're only going to focus on sampling that last 20 days. All right, so let's go ahead and simulate that buy and see what happens. This used to be a pretty darn good scan. So let's see what we get. Not very much. We only got 25 trades and they're not really doing a whole lot for us. So mental note on that, and again, like I said earlier, I'm not going to come back here and try and shoehorn this thing and change a bunch of configurations to what they call curve fitting and make those lines pretty the way I want them to look. That doesn't really do anybody any service to do that. You're just kind of curve fitting and shoehorning it and cheating it. Now, some of you who've been on these webinars a lot know that I also have this guy right here. This is called, I call it the washout bounce. A lot of times we're looking for these long bottoming candles, right? So again, the idea is to try and get some separation on your defender and get a decent entry rather than running with the herd. Running with the herd would have been buying this breakout right here, you know, as it was way above. And then that person gets punished. That person starts looking here. There's my stop. Guess what? The stop gets run, the bottoming tail shows up, and it just so happens that this particular scan identifies those the way I have it set. I bet you anything it happened on the open. Oh, look at that. I'm right. It happened on the open. This is where it always does. It always tries to shake the hand. See if we pull this back a little bit. We can see everybody doing their homework as they come home from job number one. They're looking at here and they're doing what they think they're supposed to do, which is mark up that low right there. But they forget that we're in a market that deals with algos and quants, and they know exactly where these levels are. And they know exactly how to come in right on the open when it's the most volatile and pick on those people and shake the stock right out of their pants. And what do you know? By the end of the day, that was the nastiest it was. And again, there's a great example of when I say let the spike volatile low print in the morning. If this price were to roll back over and make a new low, it's off. Forget it. So this scan is a little different. How's this scan been working over the last 20 days? Let's take a look. So we're essentially instead of looking for stocks on their trend line, I'll take anything kind of on here that's got a really nice bottoming candle, and then I'll use my own discretion to see if I like them or not. We'll go through them in a minute, but you know, I'm just going to right click and back test this one, trying to use the same parameters to compare it to the one we just did earlier. Roughly the same. And okay, so timed exit, we're going to make it the same here. I'm going to come back to this because this is interesting. So the same thing at market open the day after tomorrow. All right, risk management is the same. We're going to try and make 4%, risk 1% to do it. The advanced, most importantly, we're doing apples and apples here to these two different scans. Over the last 20 days, as the market's been recovering, what's working better? Well, scan number one didn't work that great, so we'll do scan number two here using the same 20-day sample. Let's go ahead and buy that and see what we get. Or press the button, not buy it. Well, now, a lot of nice green hues in this one. This one appears to be working. So what I just told myself was, really, Steve, if you're going to be swing trading, I can't really trust this scan yet. It's not really giving me what it should have been over the last 20 days as the market's been recovering. But this guy seems to be finding some interesting ones over the last 20 days. So let's explore this a little bit. Now, first thing I want to do is I want to show you something. And This is a theory I have, and maybe it's true, but on this particular run, it does hold true. When I picked the exit, why did I pick at market open? Remember, I talked a lot about how we get these moves a day and a half, 2.5 days at the most. Well, if we're going to stretch out, and try and sample for a 2 or 3 day move here, I want to get that last day on the open. I want to get those sneaky buggers gapping the price up and take that gift on the open, because a lot of times it seems like an exhaustion rally will show up on a gap, and then it just kind of sinks in from there. Your opening price is the best price you're going to get. So my theory is we can go a 3 day test here. What's going to do better? The one I just sampled, where we get out at the open and take a chance that we're going to get some good gifts as an opening a high gap on the day, or let that thing marinate all day long into the close? And my theory is that that's not going to work as well. So let's test it. All right, at market close on the same day after tomorrow. Everything else being the same, let's see what we get and how we could compare it to just a simple idea of, on the third day, do I get out at the open or do I get out at the close? And I think we will all see that getting out on the open is a little bit better. 2.8 profit factor, getting out on the close, 55%, but that's not really what we're going to look at. What Andy mentioned earlier is the average winner and loser. Getting out on the open gave us an average winner of $1.27, average loser of 39 cents. Getting out on the close of that same day, it's my theory that that third day is just a day of exhaustion and you're just fighting the wrong current. And the data kind of shows that. This is just one run. It'd be interesting to try that on other swing trades. One of these days I'll do that, but only a 91-cent average winner holding on that third day till the close, rather than taking whatever you can get on the open. So kind of proves my theory that I think a day and a half, 2.5 days, you're really stretching it if you want to start taking profits. Take the gift you get maybe on that market open. So now that we've realized that, the day to get out is probably the day on the open. Take the gaps when they're there. We have a little bit more work we can do here. Now, again, when I ran this, this was what's called the optimized. Washout, bounce, and I'll share these. Don't worry, I know you guys probably want a copy, but look at all these filters. I've kept this the same. These are all optimized. I've gone through and done some optimization, so I'm still running the same optimized version. I'm not painting new colors and trying to make it curve fitting and make the lines do better. I'm doing what was working and I'm not changing it, except for two little things we can look at, which is time of day and price. And I bet you we can improve this just a little bit. So we'll go to optimization. This first one is price, and what do you know? Right off the bat, we see everything under 20 bucks doesn't seem to work that well. That red color is standing right out, but at 20 bucks to 30, it's a completely different story. So we're now going to right click and say our minimum value for this strategy is now going to be bumped up to 20. Go ahead and set that in stone. So that's number one. Number two is the time of day, and it looks like it's working pretty good all day long. And then we have a bunch of trades here after 10 o'clock my time, which are not working very well. So at 9:59, we'll go ahead and halt that, and let's see what we get. So we'll run it again from the main window since I made a change, and we'll just go back to make sure we have our timed exit. Okay, open on the open day after tomorrow, and we want to run it. This is what we wanted to do. We wanted to cap this at 10 o'clock right there. So two swift changes, nothing really major, should improve our numbers. Let's see what we get. A profit factor of 4 right on the screws. 60% winner, 45 trades over 20 days is not that bad. It's just a couple trades a day. Average winner is now up to $1.50, and the average loser is right there. So it's almost a 3-to-1 swing there on the risk reward. So again, I'll go ahead and share this because this is what's working right now. And again, this is looking for. Let's go ahead and pull this out, and I'll share it before I do that. I'll share it. And then we can kind of take a look at a few. They'll all kind of start to stand out the same. So let's see. I'll call this a washout bounce. I've shared it before, but just to remind people, this thing is still doing okay. And if we look at the trades that came through today, that's in the chat window there, by the way. Now, LVS. This was today, right? Yeah. So LVS, there's a little bottoming tail in LVS. It's not a bad looking chart. Nice 2 or 3 day pullback. Probably one to put on your watch list. HCA didn't so much close that way, but that's all right. STNG, we're going to come back to that one. Nice big bottoming tail there. Giant bottoming tail in GWR, but I don't really care for the rest of the pattern there. So, you know, this is obviously, you're going to try and find ideas that are giving us nice bottoming tails for possible reversals. I had to close my window. Lawnmower man always comes on Tuesday during my webinar. All right, so just to kind of rehash what we just did there is just looking at two of my favorite scans and back testing both of them. And what I came to the conclusion is that the one that was working pretty well is not working like it used to. And the one that wasn't working that well is now starting to work well. For whatever reason, that's just what the data is showing us. So that's what I wanted to show today on that. Just kind of a neat little way to use the back tester. You know, if a scan comes up and you don't like the way that's returning, don't mess with it. Just put it back on the shelf until it works again, because this one was on the shelf for a while and now it's working again. And it's just the way the market is. Efficiencies work for a while and then they close up and they stop working. And it's up to you to recognize it, step one, and step two, find something else to move to.
Yep, that's not uncommon, you know.
Yeah.
Got to change with the algos.
All right, so back testing, what is working? We saw that, and we also saw the ideal swing exit theory tested, and I'm sticking with it. I've just seen way too many positive openings on stocks that you wish you sold on the open and took that gift rather than gotten greedy and waited to see if you could get more, especially on the third day.
I have found the same thing, Steve, that most of mine work better at the open versus at the close too. Yeah. Especially when you're looking for a 2 or 3 day move. They tire out. Yeah, exactly.
That's my point. You're really asking for a lot to squeeze out more green on that third day. I'm telling you, you really are. So you might as well, you know, remind yourself when you back test those, play around with those two different settings. All right, so last week, Andy wasn't here, but last week I set out some price alerts and I didn't see a whole lot going on except for, let's just go back here 5 days, 1, 2, 3, 4, 5, it looked something like that. And I thought, well, you know, silver has pulled back to a level here. It's been really strong lately, and I wasn't really seeing a whole lot. So a lot of the alerts that were set yesterday were kind of predicated on silver and maybe even GDX for the most part. Here's a great example right here of the GDX gapping up on this day and then selling off, never even looking back. So if we look at these one by one, here's a great little deal here. What did we just do? We just back tested two different strategies. Well, one of those strategies is in here, and it was this one. We found this one last week. See that bottoming tail? See that green line there after the day after the bottoming tail? That was found on, guess what? The thing that we just back tested so well. And this thing did well. Look at that, 2.5 days, and there it is. So there's a great example. Last week, it just kind of worked out that way that the best performing one that we did give out came from this alert. But coming into this week, this alert has got a bit more street cred behind it, I think. Celgene was not a silver play, but you can see the green line, it pushed through and it's just still positive, just hanging out there. And then we get to some of these silver plays, and they all kind of did the same thing. Yep. They worked for a half a day, then went negative, and then a giant gap up, and you all got gifts. Just like I said, if you took them on the open, and it's really hard not to, it's really hard to do that, I think, to take them because you want to think it's going to go higher. But
sure,
you got punished that day across the board in gold and silver. Big giant gap up, and it just sold off the rest of the day. So this is when the entire trades and those silver stocks broke that we were looking for on simple pullback, buying the pullbacks, beautiful 3, 4 day pullbacks, pushed through higher, and then gap fail. So everything broke. AG, another silver play, same thing, giant gap up and fail in the money. WPM, big gap up and fail, but they're all out of the money now. So let's wipe these out. FND was a silver play. I'm sorry. FND was our trade of the week and was also set last week. So we'll just leave that one in there.
Sure.
Yeah, let's delete that one, which will get us to this one. All right, so I got a list of a couple ideas here. First off, let's go to where we just were. All right, so two of them showed up for me on this one. The first one is TECK. All right, There is enough of a little pullback there. After a nice 2-day pullback, got ahead of itself, and it's playing with our 10-day moving average, tested it, bounced off of it. Not bad. I'm going to put the high of today right about there, and if it takes out today's high, we'll call this one of our trades. I think I just got to use that number right there. All right, the other one that came from the washout bounce, we looked at it earlier, was this one's long tail, Sting. All right, so Sting washed out. We saw again that example I showed you, washed out those perfect levels and closed near highs. So, you know, maybe a little bit left on the table, but you'd be gambling or betting a little bit early, I think, if you didn't wait for the close on a lot of these. So we'll take out today's high again, which is 30.72. And see if we can't get some follow through like we got on that one last week. Okay, so those are the two washout bounces. Notice, actually I don't have it, yes I do, PFSI was on this jam down, okay? It's not on the A table. I don't know why, probably because the short interest isn't high enough, but this is a darn good looking chart. This is what, you know, something you might see on one of Andy's bull flag daily charts. So if we just zoom out, it's a nice looking little consolidation going on there. And today it did what I like to see. Yes, this didn't test as well for swing trading, but we'll see. It might get into gear. We can't give up on it completely, but I like the fact that it jammed down. Let's see, it did it on the open. Yes, it did. Did it right there on the open, right where we would expect it to. There's our arrow. I always like it when it kind of takes out quick levels of the prior day or 2 days, and it did so. So sometimes I think these algos are a bit OCD. They want to go down and they need a reason to reverse. They need a reason to kick in the afterburners, or obviously buy and sell flow controls that. But I'll tell you, sometimes these quants maybe take a stake in some of these things. They need that counter move down first before they go up. So I noticed that this morning. This is staying intact. I really like the way this is shaping up. I'm going to use these lines here the trade ideas are giving us. I'm going to use that line right there, a profit target line. We'll just create an eyeball price alert on that one. If it breaks out of that blue line, I think I might have something behind it after all this sideways congestion that I mentioned earlier. I really like to look at. So that came off of the jam down buy. Let's move over to, actually let's not move over. The second one is on here, Zoom Z. It's on both. Okay, so here's an example where not only is it on the A table, not only has it done a beautiful breakout gap and not pulled back, it's going sideways. Looks to me like it's getting real close to wanting. I'm going to type this so I lose that arrow, we can see better. Looks like it's really going to try and kiss that moving average maybe tomorrow. So here's what we're going to do. We're going to play a little anticipatory, like these other ones do, like Tech did a minute ago, knocking out all these. So where could we come in here and say, let's see, well, today that was kind of a little spike low there. Trade Ideas is identifying this area right here. So I'm going to go with that. I'm going to draw our entry as a lower alert, not going short, going long. We're going to remind ourselves, jam down, pull back. Let's see if it works. A lot of times they do, sometimes they don't, but just enough to take out today's low and go out and see if there's any stops. That would correspond to probably pretty darn close to where the 10-period moving average is going to be tomorrow when the chart redraws. So the idea here is to not wait for a breakout above all these levels, which everybody else is looking for. We are going to try and be a little tricky and grab an entry down here on getting a little separation from the defender. As I mentioned earlier, on a possible, assuming that we can get that entry and assuming that it does in fact go, we get all this extra bacony cheesy goodness in here to play with rather than waiting for a late entry. All right, so there's that one. Yes, Donovan, I'll share the jam down as well. I shared the history of that one and I did intend to do that, so let's do that before I forget, because we're talking so much about it. Copy, and there we go. Jam down, paste. Okay, it's in there. And if anybody's on the recorded YouTube version watching this late at night, you know, feel free to email info@trade-ideas.com. We'll get you a copy of those cloud links if you want them. So a little contrarian entry on Zoom Z. We're not going to wait for the push through. We're going to try something a little different there. And we have two more. We've got RH, and this is getting back to those stocks that move. This is what the IWM is kind of doing, right? Moving higher but not pulling back. Well, sometimes I call that the train's leaving the station trade, and sometimes it doesn't even wait for this moving average to come in and catch up. But again, I'm kind of thinking we might be able to be a little tricky here, and maybe we can get some sort of a bit of a pullback. I'm just going to kind of eyeball it there, and this is something to watch. I'm just going to put it in the notes. Watch the price action at this level. And ask a question: how close to the 10 SMA is it? It doesn't need to touch, but you know, the idea here is I think this wants to go higher. It's not pulling back, and it may have a moment where it's going to try and really scare a few people, and that might be right about there at that 181 level.
Massive short float on that one.
Thank you. Exactly. Thank you for pointing that out, Andy. And that's why RH is colored in the darkest green possible, because I'm sorting by short float. All right. This is the most interesting stuff to me. I want to find a way to play this thing because it's really, really moving. And when I see it and that train's left the station, it just means you're not getting the pullback. You're going to have to chase that train if you want to get in. I've seen it before. After a few days up, it doesn't give much back. It kind of does a little flag and almost starts to like hint like it's going to move, and it's gone. So these can be really tricky. So this is kind of more of an area to watch rather than a definable buy it at this point kind of a thing. That's what I tried to put there in the notes. Lastly, we have one more on here, Sono, short float of only 17%, but I'm really liking this sideways action, and I'm really liking the way it's hugging that moving average. And really the difference between the fast line 10 period and the breakout is so small. We just have to go with, you know, the breakout. I'm going to go with a head start. That one's 1541. This one's 1540. Well, let's go with 1540. A penny off of that other wick, but I think if it takes that out, it's going to push through and at least test it. So we'll do this one as a breakout highs again, and it's long. And there we go. So that's all I've really got for you on the giving out of alerts that I see. We tried a couple things different this week. No shorts, just longs. I think that's what's going to work. Making sure I've not missed any questions here. Making sure I'm watching my mouth this week. All right. I think that's all we've got. Scott, let me give out the price alerts real quick, and then we'll bring in Scott to say hello and give some announcements here. Where did my price alerts go? Oh, they're right there. Duh. Scrape these. And remember, the trade of the week from last week is in there. Share these 7 alerts, copy, and we'll do price alerts here in the chat window. Paste, and they're on their way. All right, so yeah, come on in, Scott, and
oh yeah, your RH is a short, so they'll have to switch that. Just switch it, guys. Show them how to switch it, Steve.
Let's do it. I'll just do that. Thank you for pointing that out. Why can't I edit that price alert? What's going on here? That's weird. There we go. Edit price alert. Long. Let's give out the correct version here. I'll do it one more time. Okay, let's do correct alerts. Thank you for catching that, Hal. All right, Scott, I'll go ahead and put the slide up. I'm ready for you.
Yeah, sounds good. Thanks. A couple things on the way before we end the webinar. We have a summit coming up here in San Diego. Everyone's invited if you can come. Get your tickets at trade-ideas.com/summit. Also check out that page to see all the speakers that we've got so far. We're going to have over 8 speakers, a panel, lots of great networking, breakfast, catered lunch, networking happy hour afterwards. It's a good day. Last year's was fantastic. Just go to trade-ideas.com/summit to find out the details. You can also register for the live stream at trade-ideas.com/livestream to watch online live that same day or get the recording link. Just put your email into that page and you will get instructions closer to the date about how to watch. We have a series of ebooks that are new or newish now. You should have a copy of them. If you don't have a copy yet, Just go to trade-ideas.com/setup. There's 3 books, 2 chapters each, arranged by subject. Both Steve and Andy contributed chapters to these. Really good resources. They also have cloud links in some of the chapters that you can go ahead and put into your own practice. We've got a podcast. You can register for that just by searching for Trade Ideas Podcast and clicking on subscribe. So subscribe to it to get the newest episodes. Also check out the back issues. There's some good guest interviews in some of the previous editions. We have a code that's good for the remainder of this month. Summer End, all caps, like it is on your screen, and that's good for 15% off the first month or year of any Trade Ideas subscription, Brokerage Plus, or upgrade. So if you're on standard and you want to get premium, just do that. You can contact us by email at info@trade-ideas.com. That's the best place to send your help questions because it goes into our help desk software that gets routed to the best team member to answer your questions. So do use that email for any questions. You can also follow Steve on Twitter at TodayTrader. Follow at Trade Ideas. Jamie Hodge, our other friend, is at QuantBot. Trade Ideas Pro is the Facebook handle to follow and share stuff with your friends. We're going to have this recording up later on tonight or tomorrow, so stay tuned for an email. Thanks, Steve. Thanks, Andy. Thanks, all.
See you next time. Thanks.
Thanks, everybody. I'll see you on Thursday. Bye-bye.
Bye-bye.